Wall Street is bracing for a pivotal moment as one of the most controversial names in the market prepares to open its books. With electric vehicle sales slipping annually and competition from China heating up, the narrative is shifting rapidly from cars to code. Is the promise of autonomous driving enough to justify the valuation, or will the hard numbers from the holiday quarter dampen the enthusiasm? The market is waiting to see if the future can outweigh the present this Wednesday. Welcome to TickerWatch News for Tesla, Week 4 of 2026. This week's news and developments focus on Tesla as it heads into its fourth quarter earnings report amidst a backdrop of geopolitical tension, shifting government incentives, and aggressive bets on artificial intelligence. Tesla shares closed the recent trading session flat, hovering around $445, while the broader market has seen pressure from rising government shutdown risks and tariff threats. Tesla has managed to perform marginally better than some of its Magnificent Seven peers like Microsoft and Meta over the last week. However, futures markets indicated a downward trend to start the new week, influenced by broader macroeconomic concerns. The stock remains under scrutiny as it has lagged behind the broader market over the trailing 12-month period. Despite this, investors have shown a willingness to support the share price as long as the company maintains its trajectory toward future technologies, specifically regarding artificial intelligence and autonomy. There are several major stories driving the narrative for Tesla this week. Earnings convergence in expectations. The most immediate story is the upcoming fourth quarter earnings report, scheduled for Wednesday, January 28th after the market close. This is part of a massive earnings cluster that includes Microsoft and Meta. Analysts are expecting earnings of roughly 44 cents per share on revenue of approximately $25 billion. While the company set a new record for deliveries in the fourth quarter, shipping nearly 500,000 vehicles, annual figures tell a different story. For the full year 2025, Tesla delivered about 1.6 million vehicles, marking a 9% drop compared to 2024. In contrast, Chinese competitor BYD sold 2.3 million vehicles, solidifying their volume lead. The earnings call is expected to focus heavily on how the company plans to reverse this annual trend while managing margins. Progress on robotaxis and Optimus. Beyond the car business, attention is centered on Tesla's autonomous ambitions. The company recently deployed a small fleet of driverless robotaxis in Austin, Texas. These vehicles rely solely on cameras, a divergence from competitors that utilize additional sensors like LiDAR. Additionally, Elon Musk stated that human safety monitors would be removed from robotaxi operations in Texas, signaling confidence in the software. However, timelines remain fluid. Musk described production for both the autonomous Cybercab and the Optimus humanoid as agonizingly slow, though he expressed hope that Optimus production would begin next year. Prediction markets are currently pricing in a low probability, around 14%, that the lopped robot launches within this calendar year. Tariff threats and trade policy. On the macroeconomic front, President Trump has threatened a 100% tariff on Canadian goods if a trade deal is struck between Canada and China. This represents a significant risk for the automotive sector, which relies heavily on cross-border supply chains. While Tesla produces a significant volume of vehicles within the United States, trade barriers could impact the broader logistics and parts ecosystem. This comes as the administration also moves to rescind EV tax credits, a policy shift that has already forced competitors like Ford and General Motors to adjust their EV strategies. Market reaction in investor sentiment. Investor sentiment heading into the print is cautious, but focused on the long-term vision. The Magnificent Seven moniker is evolving, with some market observers suggesting a new acronym, MANGO: Microsoft, Anthropic, NVIDIA, Google, and OpenAI, which notably excludes Tesla. However, Tesla remains a key holding for those betting on physical AI and robotics. Retail sentiment is mixed. On one hand, there is frustration regarding the company's polarizing public image, with reports of some owners distancing themselves from the brand. On the other hand, shareholder engagement remains high. The top questions submitted for the upcoming earnings call relate exclusively to full self-driving capabilities in the Optimus robot rather than traditional automotive metrics. From an analyst perspective, opinions vary. Zacks Investment Research currently carries a sell rank on the stock, citing earnings misses in the last 4 quarters. However, they note that the energy generation and storage business is showing exceptional growth, with deployments setting a new record in the 4th quarter. Technical and fundamental check-in. Fundamentally, Tesla is navigating a transition period. The automotive gross margin remains a critical metric to watch, especially given the price cuts utilized to spur demand in 2025. The expiration of federal tax incentives in the United States presents a headwind for domestic demand. However, the growth narrative has shifted to the energy sector and software. The energy sector is becoming increasingly lucrative, with gross margins estimated to improve significantly. The company is effectively trading on the promise of its AI infrastructure, with valuations disconnected from traditional automotive multiples. The stock currently trades at a significant premium to the S&P 500, reflecting these future growth expectations. Technical view. Technically, the stock has been moving sideways recently after peaking in October. It is holding ground better than the software sector, which has faced a sell-off due to fears of AI disrupting traditional SaaS models. The reaction to Wednesday's earnings will likely determine the next major trend direction. A failure to provide concrete timelines for the cybercab or disappointing guidance on automotive margins could test support levels established over the last few months. What to watch next week? The Wednesday catalyst. The primary event to watch is the earnings release and the subsequent conference call on Wednesday afternoon. Listeners should pay close attention to capital expenditure guidance. Investors want to know how much Tesla plans to spend on the AI arms race, specifically data centers and compute power, and how they plan to fund it. Forward guidance. Look for commentary regarding the One Big Beautiful Act and the removal of tax credits. Management's view on how this will impact 2026 demand will be crucial. Additionally, any updates on the cheaper universal EV platform mentioned by industry peers could signal how Tesla intends to compete with low-cost Chinese rivals. Regulatory environment. Finally, monitor the situation regarding the Trump administration's tariff threats on Canada. Any escalation here could trigger volatility across the entire auto sector, regardless of individual company performance. Closing summary and takeaways. To recap the key points for Tesla this week, earnings deck, 4th quarter results arrive Wednesday with analysts focused on AI spending and profit margins. Sales slump, full year 2025 deliveries fell 9%, surrendering the top volume spot to BYD. AI pivot, the narrative is heavily reliant on robo-taxi testing in Austin and the development of the Optimus robot. Energy bright spot, the energy storage division is hitting record deployments and improving margins. Macro risks, new tariff threats against Canada and the removal of EV tax credits pose headwinds for the fiscal year 2026. That concludes this week's update for Tesla. As we head into the busiest week of the earnings season, volatility is expected. Please remember this podcast is for educational purposes only and does not constitute financial advice. If you found this update helpful, please subscribe and leave a review. It helps others find the show. Thanks for listening, and we will see you after the earnings call.